Okay, yes guys, welcome to the trade recap of the trade we took today on Tuesday 29th. So let's get into it. And why did I actually take the trade I took? Maybe some of you guys took different trades. Let's do an overview and a overall breakdown of my thought process on the trade that was taken today. So as we do, starting on the daily time frame on both NQ and ES, we want to understand where is the next daily candle likely to draw to as of now. So considering this is Tuesday's candle as of now on the daily, has not been replayed back on ES, however it has been on NQ. So understanding on the daily as of now, directional bias today was definitely a little difficult to identify. However, by using a few techniques, you can identify the draw on liquidity as of today. So starting on the daily, I'm going to ask you a question. Where do you identify the next daily candle likely to draw to? Well, the next daily candle as of now, I see an unfilled daily bullish gap resting below its current point in price. We have taken out this previous high. However, I don't really see that as much of a reason why we should draw lower from that point. I see very good bullish structure here. Bearish PD rays such as this bearish gap has been inversed. Then we have this bearish for value gap. It got inversed. We traded out of new day opening gap on Tuesday and price has drawn higher ever since. So now we've drawn towards buy side. I don't see why price is now going to suddenly reverse back and drop back to this low. So I have a strong bullish bias and I see we have respected bullish PD rays and disrespected bearish. The only draw on the daily as of now, we're not trading out of a daily bearish or bullish gap, apart from this bearish gap, but it's already been filled. We have an unfilled daily bullish gap. So as of now on the daily, on NQ, I can see that price would likely want to draw towards this unfilled daily before we then either inverse and draw lower or we respect it and draw higher. And now let's take a look at the 4 hour. So one thing to note about the 4 hour is that it definitely is a little difficult to identify where are we likely to draw to. Well, as of now, as we've already said on the daily, is that we do have strong bullish structure. Bullish PD rays are getting respected. We have this mitigation block on the 4 hour time frame paired with that 4 hour bullish gap got respected. So at the moment, we are seeing bullish PD rays respected and bearish disrespected. We do have a draw on the unfilled 4 hour bullish gap, same with the daily. So I would say the two time frames here are going a little against each other. We have a draw lower on the daily and a draw higher or neutral bias on the 4 hour. So I'd say so far we've not really determined a strong bias, which we can both agree on. Also same, when you do work out the bias on NQ, make sure you're also looking at ES on the same time frame, corresponding the two pairs together. So now let's look on the hourly time frame and see if there's any differences that we want to note as well. And by the way, ES is not replayed, so the hourly candle that we are actually looking at here is going to be this candle here at 9 AM where we traded back into this 1 hour bearish fair value gap, as you guys can see there. So looking at price on the hourly time frame, I'm assuming that price is likely to draw back to this previous low. Why do I assume that? Well, yes, we are in 1 hour bullish fair value gaps, as you can see there, and we do have bullish structure. However, our most present fair value gap is going to be this 1 hour bearish gap paired with the bearish breaker, as you guys can see here, paired with this 1 hour bearish fair value gap. The overall draw for price on the hourly time frame appears to be bearish. Now if you take a look at the 15-minute time frame, you can see we've taken out the short-term high, we've had an internal sweep of liquidity, we've tapped the 15-minute bearish gap, as you can see there, and then we've seen price continue and react sharply off that towards this previous low where we have the 1 hour bullish gap. As of now on the 15-minute time frame, I'm going to look to mark out the key liquidity levels on both NQ and ES. And guys, if you are enjoying these trade recaps that I'm doing each day for price, then make sure to drop a like and subscribe to the channel. As you guys already know, I've said it a few times, we're on road to 100k subs this year and we're making it happen. So we have a set of Asia highs here at 10:15 PM. We also got a set of London highs here. And if you take a look at ES, we actually got a set of equal highs here, which is London, Asia, equal highs. It's a bit of a mouthful to say. And from that point, we have seen this 15-minute bearish gap be respected on both NQ and ES. So as of now, we could very much easily draw back to this point of sell side that we marked out already with the unfilled daily resting below. So I've seen that as the overall draw. What is this point of sell side? Well, this is actually going to be our previous day low from Monday, as we are monitoring Tuesday's price action. Each day you want to mark out the key liquidity levels, previous day low, previous day high, data lows, data highs. If you do have a set of news at 8:30 or 10 AM, then make sure to mark out the high and low created from news, London, Asia, and unfilled imbalances as well. And there's obviously other liquidity levels levels that you do look to mark out. Right, so now we've marked out London highs. Let's drop down towards the 5-minute time frame and now the 1-minute time frame. Let's monitor price upwards to the first day of macro as we're currently at 9 a.m. So that's the 9:30 open, and then we have the first day of macro at 9:45. Make sure your entries are always inside of macro. I know I've repeated myself a lot about this, but some people are new to the channel, so I got to remind them and let them know as well. So minor sell side's been swept. We've tapped the 1 hour bullish gap. At this point, we are more 50-50 neutral bias at this point, and considering we're in a 15-minute bearish, a 5-minute bearish, and a 1 hour bearish, looking for longs from this point is definitely going to be a risky play. Let's fast forward price. Okay, so as of now, you can see we're currently inside of the first day of macro. At the New York Open, not much happened, to be honest. It was a little slow price action. We started to pick up as we got in towards the first day of macro. You can see price has traded back into what? The 1 hour bearish fair value gap. So let's mark that out quickly, and the 1 hour is obviously going to close at 10 a.m. So we're currently at 9:50, so in 10 minutes we get a close of the hourly candle. Let me put this down to 3x and let's fast forward price. So from this point, trading out of a 1 hour bearish and a 15-minute bearish fair value gap, you're not going to be looking for longs from this point. There's no clean opportunity here to take any positions at the moment. Okay, so now we've gone past 10 a.m. Let's see the hourly candle closure. So you can see the hourly candle that closed at 10 a.m. actually respected the 1 hour bearish fair value gap. If you take a look at the 15-minute, we're still inside of that 15-minute bearish gap. Therefore, there's simply no positions that you should look to take from this point. Is price likely to draw towards London highs and equal highs on ES? Absolutely. Does that mean you should be taking a position? No. So now let's fast forward through this first AM. Okay, so now we're at the end of the first day of macro. There's going to be no positions there. Let's simply move our line. I like to do this. I don't know if you guys like to see a visual of the macro time window, but now we have 10:45 towards 11:15. So now let's wait towards the second day of macro and see whether we get any opportunities for the second AM. Okay, so now we're inside of the second day of macro, and honestly, I believed that we was going to have to wait for the lunch macro today, and we wasn't going to take any trades inside of second AM. However, as you guys will see now, let's put it up on ES as well. So at this point on ES, on this specific candle, at 11 a.m. actually took out them equal highs on ES. Therefore, what is that giving us on NQ? Well, if I just fast forward price on a 3x speed forward just a little bit, now you can see this candle has already formed to start to displace lower. So now you can very cleanly mark out from London high towards previous high is that we have a higher time frame bearish SMT, and from London high to ES's previous high, you can see that ES took out that set of equal highs, which is perfect. This was another confluence to an already existing model in price. So we have our very clean bearish unicorn, bearish breaker paired with the fair value gap. Very, very obvious trade today. This was an A+ trade. And as a final confirmation, one thing that we do look at is the 5-minute. Are we in a 5-minute bullish gap? Is the draw higher on the next 5-minute candle? No. Now to take a look at the 15-minute. Is the draw going to be higher from this point? As of now, I would say no, because we're not in a 15-minute bullish gap. We're not in a 5-minute bullish gap. Therefore, that means on the 1-minute time frame, we are obviously safe to take a short here with this clean, very clean A+ setup indeed. We do not have to take London highs on NQ. It's been taken on ES. We've had a sharp displacement lower, bearish breaker inside macro, and these 1-minute bullish gaps are not anything that we are looking to monitor or worry about at all. To mark a valid displacement, the candle closure must be below the previous short-term low. As you can see here on ES, we had a very clean displacement lower. All candle closures below that previous short-term low. So on NQ, close below that short-term low with the candle closure as well. And we're simply going to look for an entry off that first presented fair value gap paired with the bearish breaker, which is plainly obvious in plain sight. And at this point, running a 25 handle stop is going to give you a valid stop placement. It's above the bearish breaker. It's above the fair value gap. This is our displacement candle's high. So at the displacement candle's high, it's 25 handle stop, which is perfect. First TP in this case, I usually look to close out fully at a 1 to 2. However, previous low where price has to draw to this low for this trade to be valid, it gives us a 1 to 1.7 risk to reward. Therefore, in this scenario, I actually took partials at this low and took another contract off, which I'll explain shortly, the 5-minute bullish unfilled gap. So you can see here we have this previous low closed out 50% at this low, and then on the 5-minute, using the fib tool for the unfilled 5-minute, as I seen this as a draw for price, I mark from this wick's high to this wick's low 50% of that range. I look to close out just one more contract 50% of this range. And then my final contract, which actually never got filled, but we still made a lot of money today, was at this point a sell side. And then as you take partials through the trade, your R multiple is going to get affected. However, I still secured over a 1 to 2 risk to reward today with my second TP getting taken on that 5 minute. So now let's see whether we get an entry for price. And there you go. So the next candle opened. It gave us an entry off that 1 minute bearish fair value gap. You'd be in at this point and looking to target obviously this low, and this other previous low as well. And a point that you'd move your stops to break even is once we take that short-term low. This should not act as a point of liquidity for price to come back to the short-term high. We should continue through and go towards our first TP, majority of the cases. Okay, so as you can see here, we've taken out that short-term low. At that point, this candle at 11.11, I went towards break even. It was a completely risk-free trade at this point. And there you have it. So our first TP has now been taken. I closed 50% of my position at this point. I had my stop trailed as of now just above this bearish fair value gap at 576.25. So I haven't trailed my stop by a lot, only by around 8 handles or so. But by the end of the year, you are going to save a lot of money from doing this, and trailing your stops correctly is going to massively help you. Why have I not trailed it to this previous short-term high? Well, price can very easily come back to this short-term high, tap this bearish gap and this bearish breaker, and very much easily continue towards our final TP. So for the sake of moving our stops to this high, I'm going to leave them above this bearish gap to be safe. Once we take this second TP and take 50% range of the 5 minute, then I'll look to trail my stops more aggressively from that point. Okay, so now we've taken the second TP and created this second short-term high. I'm going to look to trail my stops just above this bearish gap here. So at 557.25, around this area at 557.00, I'm going to look to trail my stops to this level at 557 above the short-term high. So in case price takes out this short-term high, reacts off this bearish gap and moves lower towards sell side from that point, I'll most likely be safe from that point. Therefore, leaving my stop now above this bearish gap, above the short-term high, it's in a correct place. If my stop gets taken from this point, I'll be happily taken out of this trade. And I'm already 3 contracts out of 4 closed out, so I'm 75% closed out of my position at this point anyway. And then as you can see here, I was taken out of my trade for a 64 point gain. So I managed to secure 64 points or 65 points around that area on this trade I took in the second day macro. And after that, I'm done for the day. Even if I secure only 25 handles on the day, I'm never going to look for another opportunity or look to take another trade. Even if it's A+, I won't even see it because I don't monitor price after a winning trade. Once I have a winning trade, I'm done for the day. I'm off. I've got other businesses to run. And as you should as well. I mean, outside of trading, it only takes 2 hours in the morning AM session, and once you've got that out of the way, then you have the rest of the day to focus on making more money on other businesses that you run, such as myself. I manage the properties that I own on a short-term let and also a long-term let, so anything that goes wrong with that, I'm calling about that. And I also have another business that deals with scaling social media brands as well. And guys, if you have enjoyed this trade recap of the trade we took today, make sure to obviously drop a like and a comment of what you want to see inside of the next video. We are currently in Morocco, and my geography is the worst. I didn't even know that Morocco was in Africa, so I only found that out yesterday. So that's something new that I've learned. I didn't even know that. I thought Morocco was in Europe, so that's crazy to me. But just a couple days ago, I was in Spain. So just yesterday, I was in Spain and I was trading. I was trying to trade the AM session. All the electricity wipes off. I wake up, my phone's not working, nothing is working. So I thought maybe it's just the Airbnb. I was like, it's not a problem. So then I packed all my suitcases, I left. I was like, I need to find a place which has electricity and data. So I started to walk down the road trying to find some signal to get the Uber, and luckily I managed to find just one little pocket of signal, booked the Uber. I go to the closest hotel, which at the time was the Hard Rock Hotel in Marbella. So I booked that for like a couple nights and I thought I could lock in there ready for the rest of the week. I go to the Hard Rock Hotel and now they got no electricity, no generators, nothing. They say they're cooked. So I said I'm cooked. And then at that point we sat there, we was like, we'll give it 3 hours. We've already missed the AM session. I hit a little gym session and then everyone sat there normally peacefully just eating an ice cream. I asked them, I was like, you okay? Like, you do not understand, you know, the whole of Spain is going down right now. We got no electricity, nothing, and these people just sat here peacefully. So I was losing my mind. The ATM's not working. I can't get cash out. So I pack my bags again and I leave. And then I find this taxi driver. Luckily, he's connected his, you know, his payment device to a satellite, and we've just hit the payment, and I said, look, take me to Morocco. We need to leave this country now. So he does. He takes me to the wrong border. And now we're at this ferry. We're trying to catch a ferry, and then we're at the wrong port. Then we end up getting to another port. It's a very long story. Then we get finally on a boat, which we paid for in cash from an ATM that's not working. So I had to transfer someone to get some cash. So I double transferred him. It was like 50 euros. I was like, look, take 100. Just give me 50 euros cash. We managed to pay for the ferry. I get to Morocco, and I'm pretty much, that's the end of the story. And now I'm in Africa. But I mean, just in a couple days, I mean, I'm going to fly over to the UK for a few days, and then we're actually going to head over to Mexico and possibly Miami as well. So it's an eventful time of the year, but this is what it's like all round, to be honest, especially when you guys start getting paid out consistently. I know a lot of you already are, and many of you are going to get to that same level as well. You're going to be finding yourself struggling on where to actually stay, and that's the biggest and best problem you can have, is that you don't know where to go next, and that is my biggest problem. So guys, enough of the waffling. Thought I'd just let you guys know what happened over the past couple days. I'll speak tomorrow for the AM session. Have a great rest of your day.